Ladies and gentlemen, hope your day is good. Welcome to Financial Literacy Simplified. I want us to learn about financial independence. Independence is the ability to meet your needs and wants, even if you are not actively involved in income generation. We shall look at this matter in 5 aspects. We shall start with earnings, expenditure, savings, borrowing, and eventually investments. In terms of earnings, one can be employed or in a business. There are what Robert Kiyosaki calls the cash flow quadrants. There are 4 aspects in the cash flow quadrant. On the left side, there is an employee, there is self-employed. On the right side, there is a business person and there is an investor. It is always our desire to grow from being an employee to becoming an investor. The likes of Warren Buffett, the likes of Chris Kirubi, it is always our desire to eventually get there. Now, for people who are employed, they have an assurance that salary will be paid at the end of every month. If you are paid on a monthly basis, you know that right now we are in the first weeks of August. Most people have been paid the salaries for July, or by the time we are hitting 10th August, most people will have been paid salaries for July. That is a sweetness. The disadvantage of being employed, your income does not grow as the desires of your life grows. As your taste buds grow, your income grows at a lower rate compared to your needs and desires. And because of that, you find it is most of the time not enough. Your income from employment is the most taxed. Talk about here in Kenya. We have the Social Health Insurance Fund. It hits most employees. There is the Affordable Housing Levy. It hits most employees. Most of the deductions, tax increments, they always hit employees. The others can be able to use mechanisms to avoid or even evade, but an employee with a pay slip, you know you must pay taxes. The other disadvantage of this, you must work whether you feel like or not. You must work Monday to Friday, 8 to 5, and sometimes even Saturday, 8 to 3 or whatever, 4 p.m. Now, the next aspect is being self-employed. Self-employed here, there is a sweetness. You own your time. You can report to work on Monday at midday and leave at 3 p.m. You can decide Friday I'm not going to work. Yes, you can do that. But the disadvantage is your income depends directly on your effort. If you do not go to work that day, you will not have an income. Those who are self-employed, we could have consultants where you may not be able to delegate your work. You must be able to do it yourself. You have accountants, you have lawyers, you have even medical doctors. You must work for you to be able to earn an income. The disadvantage of this, you may get so much exhausted. Imagine a consultant is given a project where he is waking up at 4 a.m., sleeping at midnight. You cannot do that for 2 months running. You will get totally exhausted. That medical doctor who leaves their clinic at 11 p.m. every day, Yes, they may be making income, but there is total exhaustion. The next, now we go to the right side of the cash flow quadrant. We have the business people. Business people here own systems. You are a business person with 1 or 2 or 3 employees. Here, systems work for you. You just need to just give an oversight, a managerial oversight, and everything will be done according to your desires and plans. The disadvantage of this, if you do not have good plans, people will be conning you through pilferage, through what do you call it? Through stock lifting and so on. I will give an example of somebody with a boutique. You are selling clothes. You have an employee, you are paying rent. You are paying salary to that employee. You pay rent to your premises. You pay municipal council or county government licenses. The employee has kept some clothes somewhere hidden, so that if they come and somebody comes and buy, they say, we are selling this cloth or this trouser at 1,500, but I can find one at 1,200. They go take their cloth or their trouser, sell it, and you will pay them salary. So if you are not keen on this, you will get people, paying people who are doing their own business. The next on the last category is the investors. Here the investors own money. The rich people, they are the ones approached by the government, by individuals. There is this project we want to do. The government will come with what we call private-public partnerships. They tell this person, invest this money here, and you will get some money. Things like KenGen, electricity generation. You find people, there are some private power sellers who sell to Kenya Power. There is the aspect of like eCitizen. You find there is 50 bob that goes to somebody who developed that platform. Here, people, money work for you. All you need is, let's say I have $1 billion. Somebody will come and tell me, I want you to invest this much money in this project. And I will ask him, what will be my return on investment? And just by that, I am assured money is working for me. The disadvantage of this, has some political undertones. If you are not politically connected or correct, you may find politics finishing your business and so on. It is always our desire to make money work for us. Now, as you are in the earning income, you must, for you to be able to be financially independent, you must be able to understand some dynamics. What would happen if your income increases without your plan? What would happen if your income drops, or again without your plans? If your income increases, remember, if you do not plan for that income within the first 3 months, that expenses will naturally take care of that income, and you will start realizing this money is not enough. So within the first 3 months, if you get an income increment, you can decide to clear bad loans. If you have very bad loans, you can decide to save for a project. You can decide to save for your pension scheme. You can decide to expand your business. And that one later, you will be all smiles because you are not depending on this. You are able to survive without this sudden increment. So you can still be able to survive, and over time that money can generate you more money. There is the other aspect of, what if, God forbid, your income drops without your plan? Here, In Kiswahili we say utakaza mshipi. You will have to reduce your spending. It is the time that you will know what are my wants, what are my needs. You will have to decide, let me first deal with my needs. If you are having very expensive needs, let's say education, it is the time you may decide, this school is too expensive for me, let me slowly downgrade to another school. Drop in expenses, you may find that you may decide to use your additional skills. Maybe you are very good at emceeing, you are very good at hairdressing and so on. You may decide to start some side hustles to supplement your original income. You may decide maybe to clear debts. You don't want to be paying interest that is not necessary. Let me stop at that. In the next session, we shall look at spending. Should you have any question, please feel free to engage me. Let's continue learning. Wish you well.